Today we're going to talk about adjustable rate mortgages. Now, I'm going to first look at what the historical data is for interest rates, and then I'm going to make my case for when it's a good idea and when it's not necessarily a good idea to get an adjustable rate mortgage. Hey guys, it's Mortgage Mel, and it's time for today's Mortgage Minute. The first chart you're going to see is where the interest rates went the very lowest. They went to 2.67% in 2020, November of 2020 to be more specific. There's the chart right there. Now let's take a look at the last 5 years for the overall trend. First, just taking from our very low of 2.67% in November of 2020, and then looking forward to 2022, we'll see mortgage rates went up from that 2.67 low to over 7 in 2 years. If we look at the 3-year information, you'll see that it went from the low of 2.67 to almost 8% in 3 years. And now if we look at the 4-year trajectory, we went up and down a little bit, but we did wobble down to a low of about 6.25 to 6.3. And as of today, we're back up really close to 7. In some cases, people are going to be getting just slightly under 7, and some people are going to get slightly over 7% for their mortgage rate. So if I were taking an adjustable rate mortgage and I started to take an adjustable rate mortgage in 2020 or 2021, then my rate would have actually gone up. And by the time I was past that 3-year interval, if we went from 2020, the rates would have skyrocketed, and that means that my adjustable rate mortgage would be adjusting up with the market to a much higher interest rate. Now, they do have caps. There are limitations to how much each interval can go up, but depending on your adjustable rate mortgage, it can go up every 6 months or every year. And those adjustments will adjust up and down with the market. So you would need to make an adjusted mortgage payment based on that adjustable rate. It also depends on specifics of your loan product that you signed up for. But what I have noticed is a lot of people don't realize how high that their rate actually can go and how often it can adjust. The APR, or annual percentage rate, is a good way to see that. It will give you the total cost of the loan, including all of the ups and downs. So that APR will give you a really good indication of what the overall cost of that mortgage will be. Now, let's say I took a 5-year ARM and it adjusts every 6 months. Let's say I decided to do that back in 2020 because I really wanted the very lowest possible rate, and I got an adjustable rate mortgage. And now that 5 years is up and I either need to refinance or I need to be going up with the market. Well, it kind of depends on what your product was, but your rate's going up substantially. So even though you locked in with a 5-year at that lower interest rate, you're going to have a substantially higher payment going forward, or you're going to end up refinancing, but at a much higher rate, depending on when we're talking about. Does it make sense to get an adjustable rate mortgage now? Well, that depends on what your trajectory is for your life and for your home. In example, if you're looking at moving to a bigger home within the next 3 to 5 years, an adjustable rate mortgage can be a great idea because you can get that lower teaser rate potentially, and then you'll be moving before it ever adjusts. I hope this information helps. Give me a like and a follow, and ask any questions you like in the comments.